heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's world headquarters in New York. Ed Ludlow is on assignment. This is Bloomberg Technology. Coming up, Salesforce plunges as sales growth for the current quarter stalls to its slowest in history. Details to come. Plus, we continue the earnings coverage and sit down with the CEO of C3.ai as the company reports, well, some pretty decent results. And we take a deep dive into Elon Musk's universe in today's Bloomberg Big Take. All that and so much more coming up. But first, let's check in on these markets. And we are dragged lower by the absolute plummeting in, of course, Salesforce, which is having an impact on the overall S&P 500, and the Nasdaq is off by some 0.7% at the moment. Interesting that we get that GDP figure coming for the previous quarter in US growth, and actually the bad news is good news from a bond market perspective. Yields come down some 4 basis points because inflation and indeed growth is cooling in the United States. That's also helping bond markets around the world, and the European stock 600 is higher to the tune of 0.5% as borrowing costs come down that a little bit and gives some energy to equities. But that energy is not rolling into the United States at the moment, and a lot of that is on the micro data. Let's have a look at what we've been having in terms of the earnings to digest. Now, there are rays of light for some. HP, we're back, baby, when it comes to PC demand, at least from the commercial perspective. We actually see growth in their PC part of the business, not so for printers, but when we're seeing optimism going forward for a PC on AI PCs, we're up some 14% for HP. UiPath, not so. We are currently seeing real pain for this particular company, tumbling not only because it cuts its forecast, it spurs downgrades across the street, but the CEO, Rob Enslin, is also surprisingly departing the business. This is a worrying move in terms of go-to-market strategy going forward. A lot of downgrades coming from Needham, for example, Bank of America as well. Brad sales over there were off by a third. Big knock, of course, to ARK, as Kathy Wood is long this stock. Let's have a look at what's happening in terms of the key stock to watch, though. CRM, as it's known, Salesforce, wow, down some 20% over the last of 2 days. Why? Well, because we're getting some really painful growth statistics. Look, revenue is still set to grow some 8% in this particular quarter, but that is well down from what we usually see in terms of double-digit sales growth for Salesforce. Is it not able to convert generative AI? Let's ask Bloomberg's Brody Ford, who, well, was there to break the earnings across after the bell yesterday. And, I mean, painful if you're long this stock today.
Yeah, so here's what I think the big question is. As corporations want to spend money on Gen AI, whether that's servers with Dell, chips from NVIDIA, cloud infrastructure from Microsoft, where is that money coming from? Budgets are still tight. Corporations still want to spend money. We're in a kind of weird economic moment. And where it seems to be coming from is these enterprise software giants, right? The Salesforces, the Workdays. If you've just bought a bunch of NVIDIA H100s, do you want to sign a 7-figure contract to upgrade your CRM system? It seems like these are getting pushed out. And so while it looks like a small miss, Salesforce reported, 2% lower than expected, it's a really concerning sign for investors that in this moment where AI spending is all the hype, they might not be the most relevant name.
Yeah, I mean, exactly echoed by RBC Capital Markets, Rishi Jaluria over there, saying maybe this AI spend is coming at the expense of these software players like Salesforce, like Workday, as you say, which also had pretty poor earnings. The thing is, this worry is not being reflected by Mark Benioff. Look, he's an optimistic guy, always has been, but he's still showing real exuberance, really saying we're incredibly well positioned. How do we buy that?
I think his framing was interesting in the release that he says we're very well positioned for AI over the next decade, right? They have a lot of interesting features and products coming out, that you can generate emails or generate marketing stuff. But that's not expected to really create revenue until 2025, 2026. So if you're an investor and you can say, hey, NVIDIA tripled their earnings this year, Dell is up double this year, right? A lot of the hardware names have. Even Azure has a bunch of AI workloads boosting earnings. Or I can wait around for these application software makers like Salesforce to maybe get some Gen AI revenue next year or the year after. It is too much of a wait and see story for investors to want to wait.
Love that perspective. Brody Ford, thank you for bringing the
Thank
energy
you.
today on all things Salesforce. Now, let's get the outlook for investing in technology, also from the private side, and some of the competitors that are coming through in terms of generative AI to compete with the likes of Salesforce. Hiro Tamura is with us, Managing Director at Yuma Crossing Capital Advisors. Now, Yuma is a new flagship growth equity fund partnering with Altay Tiedemann Global, focused on investing in prominent private technology companies, not just in the US, but also over in Europe, where you sit at the moment, Hiro, and indeed in Asia, where you have a lot of experience. Hiro, I want to go to your experience having invested and been one of the first checks into MessageBird, now known as Bird. This is a generative AI automation company and really helping with CRM more broadly. Is that the sort of area that companies are wanting to spend in, the startup area of generative AI, at the expense of a Salesforce, for example?
Yes. First and foremost, Caroline, thank you for having me. It's a pleasure to be here. I think we're in the early innings of AI at the application layer. AI native companies are happening. I mean, you talked about MessageBird. It's in the communication space. Obviously, there's a bunch of activity happening and also in fintech, with AI being a underlying driver of a massive shift of new companies that will also tackle some of the pain points that individuals have, as well as enterprises. I think this is going to be an exciting moment. But like you said, I think there's the hardware layer, there's the NVIDIA layer, and things are happening there that are relevant today. And the computational power that will then come will really allow us to go further, whether it's powered by OpenAI, Anthropic. There's a lot of great companies in that infrastructure layer that application layers will work with, and the whole ecosystem, I think, is very relevant going forward.
Hiro, how are you seeing some of those application layers being able to weather the cost of doing their business, though, as well, and access to, well, quite costly large language models?
Yeah, that's a super good point. I think this is going to be an ongoing theme. The cost of doing business, the cost of enabling oneself with some of these very large language models that are being refined, tuned. Also, the private versions that are being built on top of it. I know that Bloomberg has their own as well. These are all costly endeavors, and I think that right now, where you will see a lot of that adoption maybe happening are, obviously the hyperscalers, as well as, perhaps big institutions, big banks, big financial institutions. I think those are areas where people are really activating to, perhaps take advantage of some of the available AI power, but this will be costly.
Therefore, where in the ecosystem do you want to write checks? Is it at the seed stage? Is it more in A and B? Where are some of the most appetizing risk rewards at the moment from a private company perspective?
For me, what I've been doing my entire career is basically focusing on the mid to late stage development areas of the company lifecycle. And I think, what's happening at the seed stage level, the early, say, fintech adoption of AI, these AI native companies, they are the versions that are actually happening today at the earlier stage. What we will see is that some of these companies will develop. They have meaningful technology. They have wonderful people who are driving these businesses. And for me, it's really capturing that value in that transitional stage from what is venture risk going into more of an execution risk type of profile.
And what's interesting is, of course, how we see the exit strategy. If you're taking and writing checks in the more older, built-out businesses, we then think of Klarna that's eyeing the market at the moment. And you have spent a long time being very senior over at Atomico, well known for highlighting the activity in European venture space and European startups. And here's a European iconic company maybe tapping the market at some time soon. What do exits look like more broadly for you?
Well, I think, I think the broader market exits in 2022 and 23 have been restrained, to say the least. But going into 2024, these companies are great companies. Whether it's early or later, you have, category-defining companies like Klarna and others who are looking to, take on public capital to even grow further. And I think that moment will be, dictated by market realities. I think that, we now have to really focus on both investing and taking the time to let companies develop, but also then thinking about when's the right time to access public markets. This is a great point, and I think there'll be focus on market realities to enable that to happen as well.
Hiro, we're a global show, and you've got a lot of global experience. You were helping Asian companies tap US public markets. You were working deeply within Japan as well. Can you just give us a sense of where the energy lies at the moment, from startup culture, from artificial intelligence and generative AI in particular? We always want to pit China versus the US, but what's going on more globally?
That's a good. I think there's I think technology, at least in the market of technology and innovation, I think it's ubiquitous and it's everywhere. I think there's versions that happen in Asia and versions that happen in Europe, and obviously the U.S. I think what I would say is the center of gravity that has to do with the current AI language, large language LLMs that we know about and speak of daily. Those are West Coast. That is happening in the U.S. and the West Coast. I think in Europe, you're obviously seeing companies that are also in the AI space, like Mistral, and there's a lot of interesting activity. But each region has the ability to create great companies, and I think this will continue to be the case in the near term.
Well, come back in the near term, we hope. Hiro Tamura.
Thank you so much.
Fascinating new fund, working in allegiance, of course, with a key wealth management player, Yuma Crossing Capital Advisors, managing director there, and having a new fund announcement with LT Global. Meanwhile, coming up, we sit down with the CEO of C3.ai. As shares jump, as you guessed it, generative AI demand is really driving the company's guidance higher. This is Bloomberg Technology. Let's just check in on C3.ai shares, having a nice jump today after the software company gave a stronger than expected annual sales forecast amid demand for, you guessed it, artificial intelligence features. Joining us now is C3.ai CEO Tom Siebel. And it looks as though, from my perspective, it's all about government spending here, federal, local. Why the focus there? What's going so well?
Well, federal is a very rapidly growing business. I think our federal business, particularly in defense intelligence, grew greater than 100% year over year. State and local, this is about government services, is a huge adopter of enterprise AI, but so is manufacturing, financial services, petrochemicals, energy. So I'd say across the board, we're seeing very, very substantially increased demand in applying enterprise AI to business processes, to government processes, to defense, and to intelligence.
What's interesting, though, is, of course, we've had a bit of worry about corporate enterprise spending on software more generally, coming from, well, the results of Salesforce today. What are you seeing in terms of enterprise? Because it does look as though the real beef of your growth is coming from federal and government. What is sentiment like for the oil and gas companies that you're working with, for the other broader sectors?
Oil and gas, utilities, government services, consumer packaged goods, agribusiness. We're seeing, very significant growth and increased demand in enterprise AI. Now, understand, Carolyn, you can think of C3.ai as really as the first native AI company. We started 15 years ago, building an enterprise AI stack. This is before Google Cloud, before Azure, when AWS was this big, before the graphical GPU. So we started early. We spent billions building a software stack. Today we have 90 turnkey enterprise applications for supply chain, demand chain, fraud, whatever it might be. So think of it as C3.ai. We're in a little bit different class than these legacy enterprise application software people. This is the first enterprise AI, pure enterprise AI play.
Well, you know those legacy people well. You sold your previous business to Oracle. And I'm interested as to why, therefore, to be brutally honest, why your share price sort of hasn't been wrapped up in the exuberance of AI. If you are such a pure play, I'm looking at, well, it's still well off the highs of 2021. What do you think you're still having to prove to the market at the moment?
Well, I think that we're at the very early stages of this enterprise AI market. We're seeing a lot of interest right now in silicon and infrastructure. If we look at the value of the stack, AI stack, at the bottom you have silicon. Above that, you have infrastructure. Above that, you have foundation models, and on top of that, you have the applications. Well, that's the level of the stack. That's the portion of the stack in which we play. Now, all of this silicon that that is NVIDIA is selling, and all this infrastructure that hyperscalers are selling, they're only selling it for one reason: building this capacity. It's to run enterprise AI applications. And Carolyn, that's what we do.
So let's get really detailed, Tom. Can you give us an anecdote of what a key company in manufacturing is using your technology to achieve?
The United States Air Force is using it for predictive maintenance for today 22 weapon systems: F-15, F-16, F-18, F-35, etc. Okay, and by using predictive analytics, predictive maintenance, we can prevent unplanned system outage and increase aircraft availability on any given day by 25%. Predictive maintenance at Dow here in steam cracking units associated with polyethylene production. Okay, we can reduce unplanned downtime by 20%. Hey, that's worth hundreds of millions of years to Dow. So these are two very real applications with substantial economic return. I would say the application that I cited at the United States Air Force might be the largest enterprise application on Earth. Shell is realizing $2 billion in economic benefit a year from what they call Shell AI, which is C3.ai combined with Azure. So the returns are substantial. This is no drill. This is not hype. This is very real.
What is the risk very real? We hype up the efficiencies of AI. We hype up the market valuations. We also, sometimes in the media, like to hype up the risks. What do you take to the risks and regulatory respect to that?
The risks associated with AI are daunting, and I would be afraid. We need to be very concerned about personal privacy. I believe that personal privacy is a fundamental human right. Okay, and AI threatens that. We will, so I think privacy issues will we're seeing. Social media, the AI in social media being used to, it's a public health hazard. Think about, depression, suicide, body image issues in young women. These technologies are being used to interfere in democratic processes. The risks associated with AI are very real, and we need to be very concerned, and we need to plan for them, and we need to avoid them.
Wow. Keep coming with some of the ideas and the solutions to planning for it. Tom Siebel, thanks for talking us through your numbers today. C3.ai CEO there. Meanwhile, coming up, we'll talk about Elon Musk wearing, is it one too many hats? We'll discuss all that next. This is Bloomberg Technology. It is time now for Talking Tech. First up, the Biden administration set to host an event on competition in AI. But the big tech names in the industry, well, haven't been invited. NVIDIA, Alphabet, Amazon, Meta, Microsoft, all are absent from the panel. Instead, the workshop is set to bring together top VC firms, along with enforcers, regulators from the US, UK, and EU. This is according to the US Assistant Attorney General for Antitrust. The speaker list was intentional. Plus, OpenAI says the impact of generative AI is just beginning from an economic perspective. Speaking at a conference in Singapore, the company's CTO, that's Mira Murati, said its latest ChatGPT-4 model is becoming more intuitive and spurring more adoption, saying, quote, over a very short amount of time, these AI systems have entered the workforce as collaborators. And Donald Trump and Elon Musk will have talked about a possible advisory role for the Tesla CEO if Trump wins the election. That's according to the Wall Street Journal. The two are said to have been discussed ways to give Musk formal input over policies related to border security and the economy. However, the role hasn't been fully developed, and it might not happen. Well, that would be yet another hat for Elon Musk. Meanwhile, Tesla, as a company, is kind of in a bit of disarray. Layoffs are mounting, morale is shattered, its stock is cratering, and sales are anemic. And some investors say it's got a distracted leader at the helm, since Elon Musk runs 5 other companies. So is everything still all right in Elon's universe? Let's bring in Bloomberg's Kurt Wagner for more on The Big Take, where you articulate what the universe is of Elon Musk and who actually helps run it. Can you give us a sense of why you decided to do this deep dive?
Of course, yeah. I mean, as you mentioned, Elon is running 6 companies at once, right? But there's only so much time in the day. And so we started asking ourselves, well, who are the people that are actually, carrying out the day in, day out tasks of running these businesses? And we realized it's not always very clear, right? It's a tough reporting challenge to sort of figure out who the power players are in Elon's orbit. So we spent a couple months, did a lot of reporting, and we tried to map this out into what we called sort of a solar system with Elon as the sun at the center and everyone else sort of rotating around him. I think it's a slight nod to, SpaceX and his ambitions in space, but also it's just the reality. Like, if you work for Elon, you're kind of at his beck and call, and you orbit him, and he is the power source there. And so we tried to map this out for people so they get a sense for who the people are behind Elon Musk that are doing the day in and day out tasks.
Can you articulate a few? I mean, actually quite a diverse cast of characters, a couple of women in there when you think of SpaceX and Twitter, now X.
Yeah, I mean, each of the companies specifically has their, senior leaders that are running. So Gwen Shotwell, for example, at SpaceX. I feel like if you look, though, at the advisors that he has who tend to show up at various companies, you think of people like Alex Spiro, his lawyer, right? He showed up repeatedly at all of these different companies. You think of Jared Burchell, his business manager, also shows up repeatedly. There's other advisors, people who show up on various or multiple boards. Friends like David Sachs, who sort of advise him but don't necessarily have a formal role at these companies. So the orbit here, the solar system here, is supposed to sort of show all these various relationships and how they intertwine. Yeah. And intertwine they do. I think that's what's super interesting here, is that these things are all coming together on any given day.
They're all coming together while he's still fighting for his $56 billion pay package. He wants more of a stake, a controlling stake in Tesla. He's got shareholders pushing back, thinking he is distracted. Is he, or is he delegating?
Yep. I don't know how you could not be distracted when you have 6 different companies that you're running at once. And it's such a key part of this whole thing because all of his wealth is tied up in Tesla, right? So if he is distracted at Tesla, if Tesla's not performing well, there's a trickle-down effect to all these other businesses because this is where he gets his wealth. It's where he gets his power. And as a result, XAI or X or Boring Company, they may suffer. So I think that's why this Tesla pay package is so important.
Kurt Wagner, great breakdown. Thank you. Meanwhile, coming up, talking of space, AST Partners, its deal with Verizon to take on the likes of SpaceX's Starlink. We bring you a conversation with the CEO next. Meanwhile, let's just look at what's happening as well with Telecom Italia as we go to break. KKR has won early EU approval for its deal. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. Let's get a quick check on these markets because a little bit of suppressed enthusiasm around the tech stocks today. Nasdaq 100 off by 0.7%. That's even as borrowing costs come down. Look at the 7 basis point move we see on the 10-year. 4.54 is where we trade. That's more to do with the macro picture. GDP slowing in the previous quarter, but so too are inflationary pressures. Does that mean the Fed can indeed cut? So we come down in those borrowing costs, but Nasdaq also under pressure for some micro data, some earnings. Bitcoin currently up by 1.5%, so a little bit more music to the upside. 68,000 is where we go for crypto. We'll dig into that a little bit more later in the show. Move on, look at some of the individual movers, though. And this is perhaps what's tugging down on the overall risk sentiment when it comes to tech stocks. Down 21% for Salesforce. This is an extraordinary move, largely because we're seeing shares slide the most in almost 2 decades because sales is the slowest in almost 2 decades. Slowest quarterly sales growth in its history, in fact. This is all renewing some anxiety that really the generation of artificial intelligence is not going to generate revenue for this particular business anytime soon. We're seeing UiPath down by 35%. Smaller business, yes, but still a focus on automation software and what generative AI in the enterprise competitors means for them. And also the fact they're seeing their CEO, Rob Enslin, taking a surprise departure. I'm looking at Dell Technologies, off by 6%. Remember, this has been a stock that's had a record winning streak up to this day. 6 straight days of gains. We're at near record highs. Dell got its earnings after the bell. What will the AI PC mean for Dell? What will, of course, continued server demand mean for Dell? Many think good news, but it is trading at a pretty high valuation. Let's, though, move across to another particular corporate story and a theme that we've been seeing. Satellite-to-phone service provider AST Spacemobile announced a partnership with Verizon this week, adding to the company's recent deal with AT&T. As you'll see, shares have surged so far this month. And it's all about the news of 100% coverage coming and the end of dead zones. Is it beckoning? Joining us is the CEO, Abel Avellan. Thank you, Abel, for joining us. And that's what you're saying. You're saying with the deal, the partnerships being struck with Verizon and with AT&T, you can offer 100% coverage for satellite to mobile in the future. Why do you need their spectrum? What does it mean to have these partnerships?
Well, I mean, the spectrum is an essential part of the service. I mean, AT&T, Verizon have premium spectrum that cover all United States. We bring the technology to make that spectrum available for every phone that is in everybody's phone. And that's where these partnerships make a lot of sense. Our plan is to eliminate dead zones in the United States. Of course, we don't do that alone. We do that with the two largest telcos in this country, and to enable connectivity for people, regardless of where they are and regardless of the phone that they had in their pocket.
And in fact, you've got deals, partnerships with more than 40 telecoms providers. This is a worldwide theme we're seeing with you. But we immediately think of competition when it comes to SpaceX and Starlink. Can you give us a discussion of how your offerings are different? Because Starlink has gone with, well, T-Mobile, or indeed T-Mobile has gone with Starlink.
Yeah, I mean, the main differentiation is, first of all, we don't need a special terminal, special devices to connect to the phone. And in the case where they had a service that may offer something similar, we believe our service is the only one that offers broadband connectivity in a sustainable way. We only need 90 satellites. We have 3,400 patent and patent pending claims. We have the largest satellites ever launched into LEO, into low Earth orbits. So our technology really differentiates us with everything else that is in the market. And this has been proven. We get constant support and overwhelming support by the wireless industry. And now the addition of Verizon together with AT&T is actually a living proof of that.
Let's talk about low Earth orbit and the satellites you need to put there, because now you've got to get them up there. And in fact, I think you're going to be using SpaceX to do so. But what does the pipeline look like for getting these launches going?
Well, we had an immediate launch here this summer. We're launching the first 5 operational satellites to be used for our MNO partners, but also by our U.S. government. So we're launching this summer. We will continue to launch during 2025 and 2026. But we start commercial services as soon as we have these 5 up.
I like that you say commercial services, because the deal with Verizon isn't yet a commercial partnership. It's a strategic partnership. When does it become commercial?
Well, the deal actually is a prepayment to use our service. So they are committed $100 million to use our service. That is 35 million in a note, 65 million in prepayments to actually use of our service. We plan to enable Verizon on their 850 megahertz premium spectrum, together with the 850 megahertz from AT&T premium spectrum, to basically have both the 2 largest telcos in the United States to get access to our network as soon as we become available.
Okay. We said at the beginning that your share price has rocketed in the last month. You've gone from $500 million valuation to in excess of $2 billion. Now, it's not as high as we've seen in previous years, in 2020, 2021, but what does that sort of volatility feel like when you've been in the game of space for more than 2 decades?
Yes, I mean, listen, the opportunity that we have is very, very, very large. I mean, there is a $1 trillion market growing faster than population. We had the fact that 90% of the Earth's surface do not have cellular broadband, and we have 5 billion phones that get in and out of connectivity every day. So this is a massive market. We are just at the beginning. We're just kicking off here with initiating services, starting with the launches of this summer. And yes, there have been some learning curve by the market, learning curve by the investors, but I think the industrial support and the on-take of our customers, which is basically are the global operators and the leading operators in the globe, it talks by itself.
Many focus on the digital divide, Verizon CEO being one of them in particular. When will we see an end to it, do you think? How quickly can we get 100% coverage for the world and access for everyone who's lucky enough to have a mobile phone, a cell phone?
No, absolutely. I think this is an area where Hans from Verizon, John from AT&T, and myself, we share a common goal, is eliminating dead zones. And not only in the United States, we obviously, being an American company, we're extremely focused here in the United States, with that remains to be a problem, but also globally. And actually, a UN Commissioner for Broadband Connectivity, we are committed to democratizing access to knowledge and information, and we believe that this technology can make a huge dent on that. There is no reason why, with today's technology, with today's advancement in launch capability, with today's advancement on our type of satellites, there is no reason why people cannot get access to broadband internet using 5G anywhere, wherever they are.
ST CEO Abel, Avellan, thank you. We appreciate you coming on just amid all the deal flow. Meanwhile, coming up, we're going to be joined by Arthur CEO Adam Wenchel on the company's latest generative AI research, really pitting LLM versus LLM. Meanwhile, we're watching shares of Amazon, but not because of its AI focus, but because of its food focus. We're up by 2.3% for Just Eat Takeaway. Why? Because its Grubhub unit, well, Amazon's increasing a stake in it to as much as 18%. They're expanding the partnership. You're going to be able to get food delivery services actually within the Amazon app. Doing well for Just Eat Takeaway that just stopped trading over in Europe. This is Bloomberg Technology. Arthur, the company that provides a firewall basically for large language models, has just released the second edition of its generative assessment project, its research initiative, which basically ranks the strengths and weaknesses of various LLM offerings from industry leaders like OpenAI, Anthropic, and Meta. Let's break it all down with Arthur CEO Adam Wenchel. Adam, it's great to have you because benchmarking is really complicated, and often it feels like when OpenAI comes out with its latest large language model, it says we're bettering this other rival at this and we're better at that. You feel like they're grading their own homework. How are you grading it from a benchmark perspective?
Absolutely. And so what we want to do is give people the tools so that they can actually grade it with how well it does on what you actually want it to do. You know, if you want it to answer customer service requests or help with your analysis, financial analysis, like how well does it do at your particular task? And that a lot of times is a completely different number than the kind of industry benchmarks that get thrown around all over the place.
And when you've done this particular report, one of the key findings seems to be, it doesn't need to be expensive. The cheaper offerings are really good and really powerful.
Absolutely. So when we first started really kind of measuring and assessing the quality of these, even 6 months ago, there was a huge difference in their ability to even answer some basic questions. And now, fast forward today, what we're finding is like, there's so many open source and different commercial models that do a really good job of answering questions. And so now what you want is one that's really fast, really inexpensive, but also doesn't hallucinate a lot, actually uses the data you give it and answers based on that. And so that's a lot of what we focus on, because that's what really business users care about, people who are trying to run these in enterprises and build applications on top of them. That
was what was positive about all of this. Hallucinations across the board seem to be coming down. So basically where the model is making things up, getting it wrong. But who is coming up out on top? Who is benchmarking from your standards well?
Yeah, there's a lot of really great, new open source and commercial ones. But, an example is Anthropic's new Haiku model, which is extremely inexpensive, very quick, does a really good job of sticking to the material you give it. So if you're feeding it with your corporate data through RAG, vector databases, it does a really good job of answering the question based on that data. And it's like lightning fast and very inexpensive. And so there's also a lot of new open source models, the new Llama models, Cohere's Command R models. They're all doing like extremely good jobs. And so, what people are choosing on now is, really these other things around how little does it hallucinate? How well does it kind of work for my business application? And that's what we help people measure and navigate.
How are you measuring cost? Because there must be cost built in at all sorts of different layers as to whether you're affording the compute, whether the large language model provider is, through its services, giving you access to compute?
Yeah, absolutely. So when you work with someone like an OpenAI or an Anthropic, they kind of abstract all that away and it just happens magically, and so you just pay one price. When you're running open source models, there are some providers that'll run them, so you can run them through like AWS offers their Bedrock service, and Hugging Face offers some services. But a lot of times what people want to be able to do is kind of run their own GPUs and run them there. So that just because it gives them more control, it gives them better guarantees around data privacy, there's a lot of advantages. And that comes with some complication, but it also comes with a lot of assurance about what's going on, and you can kind of guarantee where your data is going.
Ultimately, your business is about making sure that companies can adopt large language models safely and ensure that they are making it best fit for their business. What are businesses doing right now? I'm hearing a lot of data that actually they're pretty fearful. They're not perhaps adopting generative AI as quickly as we all like to think they are.
There certainly are some, but we have several customers who are large Fortune 100 companies that are adopting them very aggressively. Now they are being cautious, like they're starting with internal use cases typically.
Like what?
Like everything from just sort of generic co-pilots to answering technical product questions. If you're like, we have a large industrial equipment manufacturer that is out, they have a bunch of field reps that are out there working with their customers, and they get very complicated questions, and their ability to answer those questions has just been transformed by generative AI. And so there's a lot of like use cases there. I think what we're seeing right now is there's a real difference between the companies that just sort of announced, made announcements about AI and all things we're going to do in AI to get the bump on their stock price, and those that are actually like putting in the work to understand how do you create business value, like real world value from AI, because that takes work, and that's the kind of thing we help people measure, your AI performance, and then what kind of value are you creating, economic benefit are you creating with that?
And many have the anxiety that the economic benefit comes at the cost of jobs. But actually, I would have thought a lot of the companies that are adopting quickly have got to get in their own technical talent. How is that going for them?
Yeah, I mean, I think that's exactly right. Like, we've seen no evidence that people are losing their jobs for this. I think what we have seen is it making people more efficient. And so in like large functions where you might have to hire 500 people a year, instead maybe you can get away with hiring 300 or 400 because you're making them that much more efficient. But we've yet to see any job losses. And I think the people who are benefiting are the ones who are really good at incorporating these kind of co-pilots and other assistive tools built on generative AI into their workflows. Like, we use it, our developers use it, we use it in a number of ways. I use it all the time to help write, year-end reviews and different things like that. So there's just all sorts of ways you can incorporate it into your day-to-day to make yourself faster.
All about being a first adopter in these moments. Arthur CEO Adam Wenchel, thanks for dropping in, giving us a take on actual adoption and generative AI. Meanwhile, coming up, we're going to break down the latest in crypto. We've got plenty of news to discuss. Jalak Jobanputra is with us, founder, managing partner of Future Perfect Ventures. That's next. Meanwhile, have a quick look at what's happening in Apple right now. The share price, well, on the up, 0.7% on a down day. It's seeking a senior engineer to help build a television and sports app for Android. The sign that basically we're finally going to bring TV Plus services to rival smartphone platform. Mark Gurman with that report. This is Bloomberg Technology.
ETH is truly one of the foundational pieces of the entire ecosystem.
I'm not a fan of any other cryptocurrency outside of Bitcoin.
ETH is at the forefront of the tokenization movement that is going to really define the next few decades of traditional finance.
You have the biggest developer community. You have the biggest security, most DeFi protocols.
Bitcoin is the only money within the cryptocurrency space. It's designed and treated as a monetary asset. So then what do I think Ethereum is? I think Ethereum is a technology.
If Bitcoin is digital gold, ETH is Apple. It's building the app store of finance.
You can have multiple companies making the same product, but if one company is very reliable, Ethereum has been one of the first ones.
ETH is going to ride the coattails of all the access that Bitcoin has created.
Without question, it's one of the most active chains in the space.
It is more about the trust.
This is an asset that people want to own.
I think that there's a lot the market has to sort out as to what it actually is and how to value it.
I myself am very bullish ETH and the entire ETH ecosystem.
Just a few of our guests weighing in on the Ether ETF as we await a decision from the SEC around US ETFs investing directly in, of course, the Ethereum overall protocol. Let's discuss with Jalak Jobanputra, founding and managing partner of Future Perfect Ventures. It's an early stage VC fund. Basically, you focus on decentralized technologies. You focus on crypto assets, on AI, on more broadly on the decentralized space. But I want to get into ultimately what you think this institutionalization of ETH will really mean, because many feel, look, it won't be quite as popular as the Bitcoin ETF.
Well, it's great to be with you again. And I loved seeing those clips of my colleagues and friends discussing the developments we've seen in the ETH space. I think these ETFs, we had the Bitcoin ETF approved earlier this year. We had the ETH ETF approved last week. Believe that we're going to show or allow retail to have a lot more access to these crypto assets. And we're going to see many more of these ETFs being approved. And it's retail, it's institutions that don't want to custody their own assets. They want exposure to the upside these new technologies and crypto assets can provide. But it's very clunky to go out and buy ETH or Bitcoin and then learn to trade it. And so these ETFs provide an alternative for billions of people around the world.
Many are going to feel that the issue they have with the ETH ETF is they're not going to be staking. They're not going to be sort of getting money and rewards back if you're Fidelity, who's running the ETF. Is there, in that way, going to cause any liquidity issues? Is there any sort of a lack of ultimate demand coming because people do want to actually directly own Ethereum and then be able to stake it themselves?
Yeah, so I think this was a concession, to get approval. A number of the applicants for the ETF took out the staking part of it. I believe that there's enough upside in the core asset, and there's so many developers. This is still one of the largest chains out there. It's been around the longest. There are tons of decentralized applications being built. There are layer 2s being built on Ethereum to make it more scalable. So while staking can provide some extra yield, I don't think it's necessary to be able to realize the upside of the underlying asset.
I mean, Jalak, you first launched your first decentralized focused fund back in 2014. This must feel very strange for suddenly the government to almost pivot on a dime and be getting more interested in crypto and ETH. What do you mean? Is this because it's becoming politicized in some way ahead of the election?
I think there's no doubt that it's being politicized. I mean, we had Donald Trump come out and say that he would support the crypto industry. This administration, the current administration, has been very anti-crypto, and we started seeing that last year when they shut down Signature Bank. They have made it very difficult to provide clarity around these assets, and so I think we will hear more about crypto during this election. And we're also seeing Congress really start to push through legislation that will provide the clarity the industry's been looking for. Last week, FIT 21 was passed by the House, and it was pretty bipartisan. I mean, there were definitely more Republicans than Democrats that voted for it. But this bill will provide clarity on which tokens will be under SEC jurisdiction, which ones would be under CFTC jurisdiction. And that's been a big sticking point of not knowing what's a security and what's a commodity.
Yeah.
And then there's also all sorts of other regulations that are put in there and customer protection. And so the industry can move forward. This goes to the Senate next, and we'll see what happens. But Biden has basically said that he's not going to veto it, which is a positive sign.
Jalak, great to have an expertise that's been built over many years. I'm going to let you get back to the consensus event over in Austin, where I'm sure everyone will be discussing some of the politicization of your area. Jalak Jobanputra, we thank you, founder and managing partner of Future Perfect Ventures. Meanwhile, that does it for this edition of Bloomberg Technology. You do not want to forget to check out our podcast. You can go find it on the terminal, but if you're on Apple, on Spotify, on iHeart, there it is. Come relive it with us. This is Bloomberg Technology.